Okay, hello everyone. I think we're ready to start. My name is Margarita. I'm from Listing.help. Listing.help is also one of the organizers of this event. And even though I've been with Listing.help for less than a year, but this is my 7th time I participate in Blockchain Live, so it is a great honor to be moderating this panel discussion. As today we gather some of the brightest minds behind top crypto exchanges to gain their insights about the world of crypto today. So as we have a very packed agenda, I would ask our esteemed panelists to quickly introduce themselves. Please keep it short so that we have more time for the discussion. Why don't we start with Alex and go all the way down there?
Hi everyone, I'm Alex. I'm the general manager of Binance FZE, so that's the regulated entity here in Dubai. Obviously, I think most people know Binance as the largest crypto exchange in the world, where we're looking here to build a regulated marketplace. Thank you very much.
Hi everyone, I'm Jason. I'm Chief Innovation Officer at OKX. I've been with the company for 7.5 years. I live in the US. I'm also CEO of our US business. And so yeah, happy to chat with everyone today.
Hi everyone, I'm Charmaine Lim from HTX. I think those who have been in Token 2049 would know that we have rebranded from Huobi to HTX. I'm locally based here, have been in Dubai for more than 10 years. And yeah, happy to catch up with all of you anytime.
Hello everyone, I'm Alvin from KuCoin. I respond for the institutional client. And before that, I was working in the one of the biggest e-commerce, and before that, it's the traditional banking and the fintech. I'm happy to hear, and welcome to our panel.
Hi everyone, my name is Eugene. So I'm running the institution business for Bybit. Been joined the company for almost 2 years. Before that, I was with CME, the Chicago Monetary Exchanges, and before Bybit, I was with another platform called TradeWeb.
Good morning, everybody. My name is Jamie. As you can tell, I'm from the UK, but based here in Dubai. I am country manager for BitGet, so I help oversee marketing and operations within the English region. Thank you.
Thank you, guys. All right, today we're going to talk about the crypto market outlook. It is a very broad topic, so we'll try to cover as many aspects as we can. And I want to start off with the question of how would you describe the current market situation? We can speak either current market situation here in Middle East, Dubai, or just globally in general. Alex?
So I think the current market, as everyone understands it, we're in a sort of build phase consolidation. Regulations are establishing themselves, so exchanges such as Binance are moving to these markets. And then with the particular projects, the use cases are now being more formalized, and so the projects are maturing, as is the industry.
Okay, if you guys have anything to add, please.
Yeah, I mean, I would add to that, if you look around globally, there's so many areas where there's pockets of sort of clarity and companies and ecosystems developing around Web3. Look at Asia, look at Hong Kong, Singapore, even Japan, here in the Middle East, in Dubai and Abu Dhabi. And even I would say even in the US, where you see, despite some uncertainties, I think things are on a positive track, right? And so, and then you couple that with the innovation and development that's happening, I think there's no better time, actually. I think we're turning the corner from this market, but we're very excited about what's to come.
Okay, great. And I also want to check on with Jamie. Jamie, you as a country lead in UK and European market, so tell me what regional factors are influencing the cryptocurrency adoption in European market?
Yeah, I mean, it's the taboo subject around regulations clearly have a huge impact around how the way that we market, we interact, we onboard new users. But I just wanted to make a note on that. I think regulators, in my opinion, they often get a bad reputation for a lot of no reason, to be honest. They're there to support us in the right way. As long as we often kind of reach out to them, ask for their support, and use the channels of which they provide us, we've had great success. And actually, in the last week, within the English region, we had all-time highs in terms of daily average users, which was a great success of the tremendous work that we've put in place. The things that we do is we like to keep the language of which, when we're talking to our users, relevant to them in that location. So if I'm speaking to somebody that talks a little bit like me, well, okay, let's make the language appeal to that person, because it's not a one shoe fits all policy within crypto, and we should be very proud to kind of adapt to the cultures, the traditions of which we want to market within, and that is something that we would proudly adapt to along the journey.
Okay, so I see you adjust to each and every group of people that are using like the cryptocurrencies, buy and trade them.
Yeah, absolutely, and that goes from product all the way through to customer service, and even the way that we market to those individuals.
Okay, great, fascinating. So as we all see that the crypto is developing and evolving at a very rapid pace, and I want to check with Jason here. Jason, you as a Chief Innovation Officer, what innovative trends have you observed recently in the crypto space? And how are these innovations reshaping the market?
Yeah, I think, as a crypto exchange, OKX, we obviously have our exchange product, which I think a lot of people are familiar with, but something that we've been focusing more, and myself also, is on our Web3 wallet. And I think this market has really proven to be a great time to build and invest in this product, whereby we are trying to provide users who are familiar with a Web 2 or a centralized exchange experience, provide them a seamless experience and sort of gateway into the world of Web 3, meaning things like understanding how self-custody works, how do you protect and store your own assets, and then once you have those assets off the platform, you can then go do and explore some of the use cases that Alex has mentioned. So I think we're kind of right, again, like I said earlier, we're right at this turning point whereby now that we have these tools, and we're still working on these, but once you have the tools, when the market does turn, users are kind of ready to explore that transition.
Thank you for that, for your overview. The trends that you've highlighted are truly transformative, especially the insights that you shared about the safety and security. I think that's a crucial moment, crucial aspect in this current market situation. As we all see that there's also a growing participation or engagement of large-scale institutions like banks, investment firms, hedge funds, or any other financial institutions. So in general, the institutional involvement in crypto is increasing, and as Charmaine and Eugene, you're sort of like heads of institutionals, and I want to ask you guys the question from your perspective: what challenges do institutions face, and how can crypto exchanges address them?
So I think a lot of the traditional finance asset managers, funds, are kind of coming into this space. So I think they face regulations. They need some legal certainty for them to be able to operate in the digital asset world. So operating as a global platform, this is what we strive to do. And also there is the challenge for us is also the regulatory complexity across different jurisdictions. And they change quite rapidly as well. So we need to have a very robust team, and we do, to make sure that we're compliant in every jurisdiction we operate. And this will give a lot of comfort to a lot of the big players, the institutionals, and those in the traditional finance to come on board and feel safe in trading on the platform. So this is one aspect, and therefore we have dedicated managers, more personalized services for our institutional and VIPs on the platform. Yeah, just so that we can address their needs and requirements more, I guess, promptly and adequately.
Okay, what about Eugene and Alvin?
So yeah, we have been spending a lot of time talking to a lot of institution clients in the, I would say, past 10 months. I think post FTS, I think everybody worry about their asset securities, Right? That's the biggest concern like all the institution fund they have. So that's why at Bybit, I think OKX as well, we roll out the I think KuCoin, the POR. Right? We also integrate with the third parties, custodian provider like Copper, and then there's other provider also lining up, right? Just try to make sure like we can cater a lot of institutions' demand, right? Especially like at least like can sleep at night. So and then I think for the last 6 months, honestly, the market's been very quiet, very low volatilities. Of course, except yesterday. There's a lot of like delta neutral institution. They actually probably making like 3-4% of a return, right? Just because there's no much vol activity in the market, right? I mean, compare the Treasury give 5% yield, it's also quite tough for them. So what we do actually, we continue to invest a lot of infrastructure. We roll out the unified trading account so that you can trade everything under one account. You can use all the collateral, meet margin requirement that will help you maximize their capital efficiency and then also lower their operation burden. And one more thing is that we've been hearing a lot from the client, especially institutional client trading on the crypto. They always complain like trading on crypto exchange like black box. They don't know how your system works, how your matching engine works, how your rules work. So one thing we did, we reached out to a lot of clients. We offer like a deep dive section with the clients, 2-3 hours, even half day. We answer all the questions. We've been very transparent about our matching algo, about our network, so that they have this knowledge. They go back, they can optimize, the system, their strategy, that will help them improve their profits. Yeah.
Yeah, I think there are top 3 in my mind. First is the regulation challenge, and the second is the concentration risk. The third is the liquidity issues. So for the compliance challenge, I think the compliance environment is more strict, and not only KuCoin, I think the other exchanges also enhance their KYC program, which trying to reduce the compliance risk for our institutional client. And for the concentration risk, as Eugene mentioned, actually after FTX collapse, and most of the institutional clients, they're trying to reduce the transaction fund exposure to exchanges. So we just provide the institutional loan to our client, and which managed simply by the LTV, which means the user can easily to use our loan without the limitation in the withdrawal. And for the liquidity, actually, we can see the liquidity shrink while the market actually become more competitive. Based on my observation in token 2049 in Singapore, I can see more and more traditional trading firm actually join the game. And for these guys, and I think they have an advantage compared with the native competitors, because they can share the trading infrastructure, human resource, even a strategy, and between the traditional trading and also the crypto trading. So, and most of them actually told me they just expansion in such various market. So the market became more and more competitive, and we just upgrade our trading infrastructure. And for example, the perpetual trading systems, the new version actually have a 15 times QPS compared with the old one, and also the latency extend to 20 times of before. So I think most of the exchanges just similar reaction to the market, help our financial institution client to deal with that challenge. Thank you.
Okay, thank you.
Can I just add something?
Sure, absolutely.
Yeah. Eugene mentioned a great point about custody. I think custody is something that institutional clients, especially after what happened last year, just so important for them to reduce that risk. And we also agree with that approach of open custody models where exchanges can support and partner with third-party custodians, often regulated like Copper and Komainu here. OKX is working to make sure that institutions can essentially bring their own custodian and plug into our exchange and still tap into the liquidity, but at the same time have their assets stored and reconciled on a third-party platform. So I think that's a very powerful model for crypto exchanges to move towards. That's kind of something that you might see in a traditional finance world anyway, and so I think that offers a different sort of cost efficiency benefit for institutions to consider.
Okay. Thank you, guys. Yeah, as the crypto space evolves and it brings us lots of challenges and opportunities, like, and I would like to move on to the next question about, as we know, the bear market is a very difficult time for everyone, but we have no other choice but to adapt or bear the consequences. So how does bear market change the priorities and strategies of your platform? Who can take that? Jamie? Yeah.
Yeah, I think for us, you know, as crazy as this sounds, not much changed when it comes to product. I think securing kind of the way that we believe and the beliefs of the organization, maybe the integration of new developments and features along the way, which just comes gradually over time. The main thing is backing what we believe in. When you zoom out, or the famous saying in crypto, when in doubt, zoom out. Now, if you zoom out in the last 18 months, okay, it's been a tough time. But real people have been building within the market. At BitGet, we're very proud. We've gone from 500 staff to 1,600 staff. We've created a Blockchain for Youth initiative, which is a $10 million initiative over 5 years to educate young people into the space. For us, we saw it as a challenge, and that challenge was to really push on for what we believe, which is our product, and getting our product out to as many people across the world as possible.
Yes.
After you.
So to add on that, it's concentrating on a core focus, right? So when there's a bull market, there's lots of things going on, lots of new projects coming to sort of divert your attention. But at the moment, it's a consolidation, and it's about iterating on the existing tools that we have, whether it's custody, whether it's upgraded trading platforms. It's a build, fix, reiterate, and prepare for the next bull run, because you know, the next time there is that market expansion, the idea is to keep people in crypto. It's to have new people join crypto and adopt the Web3 technology, adopt these new technologies that give financial inclusion, and keep them there. And these tools will have longevity and be used, rather than sort of a little bit more gimmicky the last couple of cycles. And that's what we're building for.
I think, so our team, and I think the Huobi team too, has been working in this space for 10 years now, right? And so we've seen these cycles come about. And so in many ways, like Jamie said, there's no difference, right? You have that long-term vision, you plan to execute, and you know, ironically, you know, the best time to hire and grow your teams is the bear market, right? You actually end up with the candidates and the people that are, you know, highly convicted about what Web3 and crypto can achieve. And so it's just a phenomenal time for us to build products. Like I mentioned, we've been building our Web3 wallet. We've also been growing our teams around the world. So it's a fantastic time, frankly.
That's fascinating. Charmaine, you wanted to add something?
Yeah, just to add to what the other exchange out here have said. Yeah, we have been here for at least a decade, and we are here for the long haul, right? And there are many more decades to come. So actually, it's quite a good breather for us, right? To kind of rework it, as Alex had mentioned, and continue to enhance ourselves and bring better services to the mass market, institutions, and VIPs alike.
I do want to bring one more thing onto this question, really, because it depends on your values and where you really think on crypto within your key principles. If it's price movement, then absolutely we're in a bear market. But if you zoom out and you look at geographics and you look at some regions within the world, when it comes to mass adoption, they're in absolute bull markets. So when you remove the price action, you remove all that stuff, and you look at users actually interacting within the crypto space, it may change your mindset, and you may be aligned to the way that some of us think on this panel.
All right, thank you guys for the insights that you shared. As given the dynamic nature of cryptocurrency and industry, many of us wonder where it's headed next. So I want to ask you if you have any forecasts for the future of the cryptocurrency markets. Maybe you can name certain trends or certain crypto sectors that you expect to flourish.
So we definitely anticipating there's more institution gonna come in. I mean, just what happened last night, right? There's a news about BTC ETF, right? And then the entire BTC rally. it just shows like everybody just like very, very anxious to see like there's a big institution moves are coming, right? And then like there's another trend that I want to point out is about RWA, the real asset tokenizations. I think it definitely is quite excited about this because it brings the beauty of the blockchain that can offer like cost efficiencies, transparent, and we can offer that into the real assets, right? And then like I think the more exciting is that actually it will really bridge the blockchain industry with the traditional financial industries in a very deep collaboration way with free support from a lot of regulators. Because we talked to a lot of regulators, right? A lot of them say that, okay, we are not sure about crypto, but we fully support about digital assets, right? Especially you will have something like very solid like treasuries. So we see that's a trend, and then we see that we're accelerating more institutions like big money coming to the industry, even for this very challenging time.
Okay, any other trends that you want to highlight?
I think we can observe the very strong, very steep massive adoption curve. And for example, based on the data we observed, in the UAE, currently the young generation, whose age below 30, occupy 1/3 of the population who traded crypto. And Turkey, the percentage is even higher. It's around 37%. And the most interesting thing is the 1/3 of this young generation, they just started trade in the recent 3 months, and which means in the bearish market, and the young generation still jumping to the crypto. So I think in the future, who can make the user experience more favorable to the young generation, who can take big pie, I think, big market share. And the other trend, I think, the stablecoin could be facing a new booming. I think stablecoin already experienced a different trend, opposite trend with the other crypto. And the reason behind it is the stablecoin become the bridge between the fiat and the crypto, right? But what we can see, the money actually right now floating to the AI and the big model. And the AI and big model who consume a lot of the data. And we can see the government will make more clear regulation in the data management and governance. And the data governance will have, if data governance have a clear regulation, and which will significantly favor with Web3. So eventually, when the Web2 migrate to the Web3, and the stablecoin can be a very, very attractive bridge between these two different environments and the ecosystems, I think. Yeah, that's my observation.
All right. Yeah, go ahead.
Thanks. One other thing to mention is the trend of, the question was about trends, right, going forward? Yep. Yeah, so the trends of people recognizing how important it is to self-custody assets, digital assets, is a key one to highlight. If you look at the on-chain metrics happening today in Bitcoin and Ethereum and all the other EVM chains, you see that that's actually broadly increasing, with wallets that hold small amounts of crypto also broadly increasing. I think, obviously we're in a business where people, the exchange business, people bring assets onto our platform, but our goal is to actually get people to move into the world of Web3 and self-custody and self-ownership, right? And so the values of crypto, permissionless, owning your own assets, I don't know if it's part of the geopolitical macro uncertainty that's happening today, but I think more and more people are recognizing how important that is. And I think the tools today are actually improving to a state where you can start to, maybe not quite there yet where my mother could use it, but I think we're getting to a point where people can start to understand why they should do it and how to do it. And so I think that's a trend to watch. I think as more people go on chain, all these other use cases will start to really blossom.
Yeah, you highlighted a very interesting point. Like, I think when my mother learns how to use crypto, I think we can definitely say that crypto has been adopted, truly. And as you guys mentioned also, I think Eugene mentioned a very important aspect about regulation crackdowns. So I want to ask you just in general, how do you think, what role does regulation play in crypto? Alex, maybe you can share something?
So, as Jamie said, the regulators want what probably most of the exchanges want. They want to protect users. I mean, that's the goal that everyone's working towards. They need to understand the product. Obviously, the product came before the regulations, and so we're a little bit ahead of them. So it's about educating them and explaining how these work. It's about finding the analogous to traditional finance, because the regulators generally come from traditional finance. So again, the custody models that we see with the exchanges not hosting custody and clearing houses, that's gradually trickling down, and we're seeing application of that. The regulators are paramount to bringing in institutional business. As we said before, institutions need to understand the governance of the exchanges. Like the guy Bybit was saying, you want to understand how the technology works in order to start trading. So it's a partnership between us and the regulators to build products that will drive mass adoption. Institutions will come in and drive volumes and really help kickstart the businesses. And so, yeah, we see it for good, but what we got to understand is regulators are cautious and they're not coders, and so they move at a different pace. So we can innovate a lot quicker than they can regulate, and we just need to be mindful of that.
So from Bybit, we proactively engaging, adapting, and also ensuring that we are on the right side of the regulations. And we also communicate with our client, make sure they're also on the right side. So that's what we've been trying to do. I think the biggest challenge, number one things. So I think especially when we start operating, we're operating this like a global kind of like a one-size-fits-all model, right? That will help you to scale, right? But now it's like with different regulation, it's very difficult to scale because different regulation jurisdiction will have different requirements. Right, and I think that will kind of it's a challenge for us to face things like, okay, how I make sure I launch this product, you can fulfill jurisdiction from Hong Kong, Dubai, from Singapore, of course, US. Not you mentioned that. I think that's one challenge. And then also another thing is I think we definitely embrace. We love regulation. We think that we're put the trust into a lot of users. That's very important. But at the same time, we also think you kind of chop the innovations, right? It's basically a lot of regulations come in will tell you what exactly you can do or cannot do. Right, so I think it's very. So we are. Also, I think the biggest challenge is to try to strike in the right balance. Right, how you make sure you still comply, but at the same time you're still able to innovate, still can bring the product your customers to need, and then bring the whole industry to the next level. I think that's the one of the biggest strategic decisions or tasks we are focusing on right now.
Okay, so you just spoke from the exchange side of view, but what about users? With the regulatory landscape being more tight and tight, how does users get an impact?
Yeah, I don't mind coming on this. I think you just have to look at what's going on around the world now in Ukraine and Palestine and places like this, the freedom of way people can transfer money internationally. We saw sanctions in the real world when it came to traditional fiat, and now we see sanctions within the crypto space. When you come away from that and you look at UK users, I'm very proud to be from the UK, for example. There are brand new terms and conditions from the FCA, the Financial Conduct Authority in the UK, on how we can actually even operate with cryptocurrency. Now our tax office, they have got the right to have everything from us. They can freeze our assets. So I think it's about becoming used to the new norm. I think crypto space is, I'm not going to say been the Wild West, but it's been pretty free for a long, long time. I think regulations, they needed to happen for the longevity of the space, because ultimately without regulations for users and how we use the product, I've got to be honest, I don't think there was much hope for where we were heading.
Yeah, I actually agree with Jamie, because since the FTX debacle last year, we've seen, of course, a massive fall in volume across the board in all exchanges. And this is one of the key reasons why regulations are embraced also by exchanges. Yes, no doubt it poses challenges for us, but it's just a hurdle that we need to cross. And I think most importantly, we need regulators to come and say, and have that playbook of rules and tell us, look, what is it and how should we play? Just nail it down, and we want to move forward, with the industry. The users, definitely, they will welcome that. They feel secure, safe, and, like Alex had mentioned, institutionals would thrive on those. And as mentioned earlier, they need that legal certainty to be able to bring in the volumes and their assets in, to trade on the exchanges. So yeah, I think, yes, regulations seems like a bad word, but I think it's the need of the moment, and also the what's going to, I guess, be more solidified in a couple of years to come.
One thing I trying to add, the whatever the exchange and the user, I think the stability of the regulation policy is much important than the regulation policy itself, because when the regulator, they show the transparency and the predictable movement on the regulation policy, and then the user, I mean the investor and even exchange, will be easier to predict the future risk and remove uncertainty, which help the user to protect their own interest before anything can be forecast. And also for the exchange, we also can provide the proper service to satisfy the regulation, also to protect our investor as well. So we can see Euro and some country in Asia actually, I mean the government-wise, play the similar things, and Dubai actually just in the center of the Asia and the Euro. I think that's the reason we're sitting here, and we can see the UAE government actually trying to do the similar things. I think it's quite good for us, and actually we're quite positive for this change. Yeah.
Yeah, Dubai is definitely one of the major crypto hubs in the world, basically. Okay, we have a few minutes left, and I want to make this panel discussion as interactive and beneficial for everybody. So if anybody from our audience has any questions, now would be the right time to raise your hand and wait for the microphone. Okay, that's too bright. Seems like our discussion was so comprehensive that everybody's still processing.
Good day. My name is Ruslan. I'm from Kazakhstan. Came here just for this forum. Thank you for your information, insights, and outlook of the market. My question is for Alex. Alex, could you kindly tell a bit more about what does a finance FZE means? As I understood, it's not the whole affiliate of the Binance or something else?
Sure, absolutely. So I manage Binance FZE, which is an independent entity that is regulated by VARA. So it's different from the global order book, and it's regulated by VARA. So it's independent. We have segregated wallets, and so it's a different onboarding flow. So one of the questions that we had in the panel was, how is the user experience going to differ for regulated markets? Well, the users that sign up to Binance FZE will understand that, because there's a heightened onboarding. So we look at the KYC docs, we look at proof of address docs, we also look at source of wealth, and so that's a higher regulatory threshold to onboard on. I believe in Kazakhstan they have an independent Binance entity as well that's managed.
Okay, thank you, Alex. Okay, I see
Thank you,
one
Alex.
hand over there.
Hello, hello. I'm over here on your far right. I beg the forgiveness of the audience. I'm going to give you a perspective of an old, stupid person from the street. So I've been trying to buy some crypto for a while. I bought back in early, but I've been trying to get more. It's difficult. Something needs to be done to make it easier for the old, not so agile minds to buy in. It's great that the ETF and BlackRock's and Fidelity are coming in. That's great. But what about the little guy? I've been shut down. My bank account's in America. I can't get onto an exchange. I tried here in Dubai. I thought there were some ATMs, just buying a few sats, stacking sats. There's no ATMs that I can find. So my message is it should be easier to stack sats.
So how to onboard crypto newbies on the platform? What do you do? Like, Jamie?
Yeah, I think earlier I spoke about our young people initiative, and that's probably something that you've really touched home on, and I'm going to feed that back to our team. We do have kind of a focus on integrating educational resources, free educational programs for young people. But, I think you brought up a very great point around, the older generation. I'm not going to say the words that you said out of respect. I think it's keep it nice and friendly. But I think we shouldn't forget everybody that, we want to come and integrate into the space. So I just want to say thank you for the feedback. We'll make sure that we take that back to our teams and try and integrate something positive for you.
Okay, anybody else can take that question?
I also think it's important, the feedback, I think we're all trying, right? We're all trying our best to make sure it's easy and accessible. I think some of that feedback about how difficult it is, actually, I don't know where you're from, but you should convey that to your local regulator or to your government. I think those are actually important channels where they need to hear that there is that demand also. I live in the US, and we have a very robust system, successful or not so far, but we have a robust system for conveying that feedback. I've been to DC, I've talked to legislators and staffers, and that is the feedback that they're actually looking to hear. So I think that part of the loop is important for even for you to take part in.
So you're saying just an ordinary citizen can go to that place and leave their complaint or suggestion?
Again, I live in the U.S., and so there is a process where you can just call or send an email to your local representative, and they should have.
Do they reply? Yeah,
yes, typically a staffer would, someone on the team would do so. Yes, maybe it's a stock reply, but they do tally that sort of voice and hopefully it influences some policy making.
Fascinating. Great. Okay, just maybe one more question.
So this one's for Alvin and maybe anyone else on the panel. When does actually commerce start? Institutional signing up to exchanges, accepting crypto for their goods and services, because that's one very interesting space and I've been following it quite a while, but everyone here is after retail. I don't see many people going after institutional funds.
Going after the institutional fund, you mean, right?
Yep. Yeah. Yes.
So I mean, we've been working on. I think the first thing is there's major two dimensions. One is really the product and service that you can cater the institution's needs. So basically, institutions have different needs versus retail, right? Like the trading speed or the asset safety we mentioned before. I think another dimension really, because as an institution, I think that's different from the retail. In retail, you talk to retail indirectly when you do the onboarding, when you get them to do the trading. For the institutions, let's say you are a hedge fund, right? Before the trader allowed to trade, you have to convince their compliance officer, the risk manager, right? Make sure that they feel comfortable trading on your exchanges or the trading strategy on the exchanges. So we do have institution clients, but really it's depends on first we do our full KYC on them, right? Make sure and the risk management monitor on them. But at the same time, a lot of institutions will also do the DTQ on us as well, right? We have to submit enough information, transparent information, to make sure the compliance office, the risk manager's office, can sign off, allow the institution, especially who are manage other people's money, they feel comfortable to trade on us.
Okay, thank you, Eugene. I see we have more hands, but we are running out of time, and I want to thank everybody. You guys are amazing. The crypto space evolves because of you, And I hope to see you next time.
Thank you.
Thank you.
Thank you.